Hello everyone, have you heard about REITs, Real Estate Investment Trust? Well, if you haven't, then watch this video till end to know all about it. And if you have already heard about it, then also watch this video to understand the crucial factors that you should consider before investing in REITs. Let's begin. What are REITs? REITs are the entities that own, operate or finance income generating real estate across various sectors like commercial properties, residential buildings or shopping malls or hospitality sector. They provide investors an opportunity to invest into real estate without having to have direct ownership of a property. Just like you trade stocks on stock exchanges, you can trade REITs. REITs primarily generate income from rent and capital appreciation, and a significant portion of this income is divided among investors as dividend. In India, there are three types of REITs: equity, mortgage, and hybrid REITs. Equity REITs invest in properties and generate income through rentals. Mortgage REITs invest in mortgages and other kind of real estate loans. Hybrid REITs combine aspects of both. Now let's talk about risk and return involved with REITs. Like any other investment, REITs also comes with their own set of risk and returns. Market fluctuation, interest rate changes, and economic turndown can impact their performance, but they also have potential for higher return, especially considering their dividend distributions. Now let's talk about dividend yield and tax implications on investors. REITs are required to distribute 90% of their taxable income as dividends, and these dividends are chargeable to tax to the investors as per their tax slab. You should do a thorough research before deciding to invest into an REIT. Consider the factors like occupancy rates, credibility of the management, location of the properties, and the type of properties that an REIT owns. You can buy and sell REIT units on stock exchanges. So, do your research and evaluate your options before entering and exiting an REIT. Now let's talk about liquidity. REITs offer relatively higher liquidity than direct real estate investments. However, these levels may differ according to the demand and supply of the market. And now, last but not the least, decide your investment horizon. While REITs provide you regular income, holding it for a long term can also offer capital appreciation. Now, there you have it, all the factors that you should consider before investing in REITs. Do share it with your friends and family, and do not forget to subscribe to our YouTube channel. Thank you so much for watching.